Hello, good afternoon. You're watching Closing Trades on ET now, and for now, the market is cruising around very nicely ahead of the budget. A lot of earnings that we're dealing with. Sun Pharma was a good set of numbers. Saw a bump up of around 4%, plus a couple others that have come in the last hour or so. The likes of Maruti, etc., have been on a good side. So let's keep it with the earnings itself. We have the management of PVR joining us on the show. Mr. Ajay Bishley, as well as Mr. Nitin Sood from the company are with us. Hi, good afternoon, gentlemen. Thanks so much for making time and speaking with us. Well, while on the revenue front, the performance is quite good, there seems to be a bit of a decline on the profitability front. Could you explain it for our viewers if there's any one-off impact or anything specific that led to that decline?
Well, hi. Good afternoon to you. Well, you see, last quarter, if you look at December actually has turned out to be the best month that we've ever had. But the first 2 months were hit by the World Cup, and they were. I would say it was a triple whammy. The World Cup was being held in India. India was playing well, and they were right there till the finals. So obviously, it was a very big event. Luckily, it only happens every 4 years, but there's no question about the fact that October and October and November got impacted by the World Cup.
Yeah, it sure did. Nitin, if I could get you in, I can see a 35 crore rupee provision right back. Tell me, what's that on account of? Because it seems that bereft of that, you'd been in losses, and margins also, it seems, are a big miss. What led to that?
Yeah, so I'll answer that question.
Sure.
35 crore write back pertains to write back of lease liabilities on account of a lot of properties we've closed down during this year, which had come to the end of the life cycle. So write back is essentially on account of that. If you look at our reported numbers, out of the total revenue of 600 crores that we've reported, 35 crores pertains to write back of lease liabilities, and on an overall EBITDA of about 531 crores on a reported basis.
Ajay, hi, Ajay also joining in. Ajay calling Ajay, that kind of a scenario building here. Ajay, to what extent are the merger-related revenue benefits, cost synergies are being extracted? And also, if you could, a lot of shareholders want to know, going forward, how many quarters till we actually start seeing the full benefit of the merger kicking in as far as the financials go?
Well, we always said that 2/3 of our synergies that we had forecasted or given a guidance of 225 crores would come from revenues, which is ticket sales, F&B, as well as advertising. And if you look at our numbers, all the numbers are up on ticket prices, 271, up by about 14%. SPH is at 132, which is up by 8%. Our advertising quarter on quarter has grown. It's about 140 crores this quarter. Nitin, correct me if any of my numbers are 140 crores. So the trajectory is all going in the right direction. So I think we are already into not even a year. We'll finish on the 6th of Feb after we did the merger. And I think most of our synergies are already there now.
I was looking at the occupancy number, and it seems to have seen a bit of a dip at around 25, 26 thereabouts. But talk to me about how Q4 is likely to shape up in terms of the pipeline. And I think you had also done some special screenings of the Ram Mandir consecration as well. How did that turn out for you?
Well, you want me to answer that first? Because
either way.
Well, that's just an alternate content opportunities, whatever we get at times. It was a Monday morning, so we thought that will have a wide appeal, and we experimented with that. And we were surprised with the number of people who turned up. Obviously, it was done at a very reasonable cost of 100 rupees, but the response was overwhelming. So we keep doing experiments with alternate content, whether it was showing Taylor Swift's Eras tour, or whether it was showing Beyonce's concert. So that's just one of the things that we do. But primarily, we are an exhibition company. India's got so many movies that come through the system. We primarily show movies. That's what we do.
Absolutely. And our group just concluded the Filmfare Awards, and it was a grand January, clearly, with Animal, Sam Bahadur, etc. Tell me, what's the movie lineup looking like, Ajay?
We've got a lot of Ajay Devgan movies this time. A lot of Ajay is happening today. We've got Maidan. There's a movie called Shaitan. Then there's a good movie of what's his name? Shahid Kapoor coming. Very long name. Teri Baaton Mein Aise Uljha Jia. And then Bade Miyan Chote Miyan is a big one, starring Akshay and Tiger Shroff. Singham is coming. Aamir is back with Sitare Zameen Par. So these are the lineup. In English, of course, Dune is coming. It's a big one. Argyle is just releasing next week. Deadpool 3 is there. Lord of the Rings is there. Transformers is coming. So we've got a decent lineup. And of course, not to forget the big South movies, Pushpa 2, Kalki, Lal Salam, Indian 2, the sequel to, Indian of Kamala Hassan.
That's a long list of the movies to catch up with for our viewers as well and ourselves. Nitin, I want to understand how's the breakup shaping up? Exhibition contribution versus advertising versus F&B. F&B actually, I'm assuming that would be coming back on stream in a big way as well.
You're right. I think F&B for us as a segment has done well. And also, like Ajay mentioned, a lot of merger synergies that are playing out in this segment. Our F&B revenue is up 11%, in the first 9 months. That's largely on account of a lot of new stuff that we've done post the merger, introduction of a lot of, new non-vegetarian products, synchronization of menu, introducing products like bottomless Pepsi and popcorn at cinemas, 99 rupee product portfolio. So that's doing quite well. Ticket price also, has been very strong this year on account of, the synergies that we've realized on account of merger is growing in strong double-digit numbers. Overall, I think advertising revenue is the only one which was slow at the beginning of the year. But as we are progressing during the year, it is inching upwards. And I just want to highlight, for the benefit of everyone, that India is probably, the only country which has crossed the pre-COVID box office revenue this year on account of stellar box office that we've seen from Hindi films, which has been the big contributor. Most of the other countries across the globe, are yet to cross that threshold. But India, I think, has done much better. And, while we are fully not back, but I think these are very strong signs to show that Indian box office is moving very strongly.
Mr. Bijli, I have to share this anecdote with you. Over the weekend, I went to watch Fighter. The ticket timing was 6:15 p.m. and by the time the movie actually started, it was 6:45. I'm assuming lots of ads and ad rates also must have gone up.
Yeah, so please wear the hat of an analyst when you see 40 minutes of advertising. Actually, actually, overall, it can't be more than 28 minutes, including interval and beginning. Some of the time also gets spent showing trailers. But we try to, create that balance of giving the consumer the experience that doesn't put him off. And at the same time, making sure that our bottom line is robust by getting the advertising revenues that are needed during big movies like Fighter when they get released.
If I can bring you in the conversation here, the question is, have ad rates increased at the Inox leisure properties because they used to be at a 30 to 40% discount to the main PVR? Has been there a parity on that now?
Yeah, because that was part of the synergy, because their rates in certain properties were discounted. And so that was part of the synergy benefit that the merger was to get through advertising rates also, not just time, number of minutes of advertising, but also in value, volume and value, both.
Point taken. On that note, gentlemen, we let you go. Thanks so much for making time and speaking with us, and looking forward to those slew of movie releases that you talked about. Lots really to watch out for.
Thank you very much. Thanks a lot.
Okay, time now to slip into a very short break. But as we do that, it's all about the budget. So let's listen in what the expectations are. We have Mr. Rajesh Gandhi joining in from Deloitte to talk to us about some of the budget expectations.
There's a need to simplify the regime, bring down the rates, reduce the holding periods, the number of slabs, etc., allow offset between long-term, short-term. I think the tax holiday should be increased to a 30 or a 40-year period for certain kinds of industries. Secondly, to encourage movement of skilled workforce from other locations to the GIFT City, I think there needs to be some incentivization on the personal tax fronts. There should be a separate regulatory and tax regime for the private equity sector. There was an announcement on the intention for that few years back, but nothing has been done on the ground. So I think once that is done, we will see PE sector being kind of treated in a special way and then channeling more investments over there. The second is for the infra space. Sovereigns and pension funds are allowed to make tax-free investments up to March 24. That should be extended for a few more years to further boost foreign investment in the infra sector. And not just sovereign and pension funds. Even PE investment should be allowed to make investment in the infra sector on a tax-free basis. Green bonds is one more thing which needs to be given certain boost from a tax point of view. And India has a very ambitious target of achieving 50% target in renewables by 2070. That can be done by giving certain tax incentives like lowering of tax rate or zero tax rate on interest, removing capital gains tax on transfer of green bonds. The 15% tax holiday for manufacturing companies can be extended to the service sector, particularly the sectors which are high priority from a financial inclusion point of view, startups, fintech.
We're closing trades right here in ET now. While the Nifty is looking okay, quite a few earnings reactions. We should bring up Dabur for you on your screens and show you how that stock is panning out, or for that matter, what the reaction has been once the earnings got digested on Sun Pharma as well. Quite a bit of spike coming in on Dabur. Sun Pharma as well going very steady, up a good 3.5% as we speak. And the formulations business has actually seen an uptick of nearly about 11.5% when it came to Sun Pharma. The domestic volume growth comes at 6% for Dabur, which was definitely higher than what the street, I guess, was penciling in. And a sharp spike, given that there were concerns after the reportage that we've seen from Marico, or for that matter, the other FMCG players as well with regards to a rural slowdown. So that seems to be a little bit ebbing off. And because of its sheer underperformance, you are seeing this stock as well spike up that much more. 2% higher for Dabur as we speak right now. But let's welcome on board Siddharth Khemka as well and find out what he's making of the market right now. Siddharth, hi, afternoon. Any of the recent earnings today that may have stood out for you?
Yeah, Aisha, good afternoon. So if you look at the earnings, there are quite a few earnings that have come out specifically from the large caps. And I think if you look at Sun Pharma, that has clearly been a case of much better than expected numbers, given that pharma as a sector has not done that well. And we were expecting so if you look at the EBITDA margins have been quite significantly beat with an expectation of 25.7%, EBITDA margins at 28.8%, which led to a sharp beat in the overall EBITDA. So I think that is something that is definitely, I would say, one of the surprises in terms of earnings in the last few couple of hours.
Pharma was definitely something that stood out. But talking about standout earnings, take a look at Welspun Living as well. The profitability from 42 crores last year has jumped up to over 300 crores thereabout, or rather 175 crores thereabout. And that stock is flying away in the trading session. But talking about more earnings, Siddharth, what's the deal with Voltas? The numbers looked weak. Yes, the loss was driven by the projects business. But even for UCP business or the cooling products business, it wasn't a big surprise there. What then explains this 8% move on Voltas? And within, let's say, Voltas, Blue Star, Havells, etc. of the world, what's your top pick?
Yeah, Anisha. So I think Voltas, clearly the performance was weak across segments, specifically in the losses in the project business, that is this EMPS business. I think the stock reaction has definitely surprised us from a fundamental perspective. Looks like a lot of short covering has happened in the stock, which is leading to such a strong uptick. The analyst con call is there today at 4:30, which could give some more insights to us in terms of the future outlook. But as we say, overall the UCP performance that was comparatively better than our expectations, which could be one reason which could be the market would be looking at and could have got excited about. And overall, if you look at the stock has kind of underperformed in the recent past because of the weak performance, given that the overall sector, both Voltas has lost market share in the air conditioner space as well as the losses in the project business. If you look at the overall space, Blue Star has comparatively done better in terms of results as well as in terms of the overall outlook. So I would say that one should look at we'll have to wait for the management commentary today and then take a call on the outlook on Voltas. But definitely Blue Star with its strong results definitely stands out between the two.
Just want to bring up Maruti as well on your screens right now because the numbers are an all-round beat on every parameter and count. The total volumes have seen an uptick on an 8%, although there's been a dip of about 9.25% on a sequential basis. But clearly, they've seen lower capacity utilization, higher sales promotion, advertising expenses. But on the positive factor side, you've got favorable foreign exchange variation, cost reduction efforts, and higher non-operating income as well, which has actually bumped up Maruti's performance for them. Tata Motors, Maruti, Kunal, two charts. While Tata Motors in any case has become the most valuable Indian auto company, but Maruti as well catching up.
Yeah, it's catching up, but then the stock has lagged quite a bit behind Tata Motors comparatively. I think out of the three more prominent names, M&M was one of the other stock which had shown a lot of strong momentum in 2022 made till 2023, but then that stock has also gone to a bit of a consolidation, a high degree of volatility. Maruti, the risk reward to enter the stock at current levels is pretty much on the higher side. The stock, I think just last week or the week prior to that, had fallen back towards its 200 DMA when it managed to break below the 10,000 mark. It's however managed to come back slightly above those 10,000 levels. So in terms of price, in terms of the support, it looks like that this 10,000 mark broadly could act as a decent support for the stock. But the stock lacks momentum. I think that's the more tricky part, because when you're looking to time the stock in terms of buying price, the stock may be available at good values. But whether it's in terms of momentum, whether the stock can come back to the previous swing highs of 10,700, 800 levels and maybe even scale past above those mark in a very short span of time, that could be a big question for Maruti. So it depends on the kind of time frame investor has. If he's okay holding on to the stock from a medium to long term play and wants to buy at a good support point, then I think currently could be a very good support point for Maruti.
Okay, good support point for Maruti. But sticking with the auto space, Siddharth, what's the view on some of these battery companies? Both Exide and Amara Raja are showing good traction today. Would you be a buyer in these names, or are you recommending to just play directly through the auto companies?
Yeah, Nisha, I think there is some expectation of recovery in demand, especially from the OEM side, looking at the strong growth in the passenger vehicles sales that we have seen. So auto as a sector has comparatively done well. And to top it all, you see you have this the new rooftop solar scheme which the government has launched, where again you would require some sort of power storage units that needs to be put across. So there is again hopes that this scheme, the Prime Minister Surodaya scheme, could improve demand for the battery companies. Having said that, we have a neutral rating on both Amar Raja and Exide as of now. We would prefer to play directly the OEMs where the growth are more forthcoming, as well as the valuations are still looking that there could be further room for upside. So overall, we are much positive on the two-wheeler space, which is our preferred pick, followed by the passenger vehicles. Within passenger vehicles, Tata Motors, Maruti, we like both of the stock. But as I said, our preference right now would be towards two-wheelers, where Hero Moto is among our topic stocks, have moved up, especially in the two-wheeler space. So there could be little headroom for upside. But as a space, we continue to like the two-wheelers within the OEMs.
Okay, that's the take coming in on the autos back. But Siddharth, good to have you on the show as always. We'll let you go on that note. But here, cement major Ambuja Cements, which has come out with its third quarter numbers. Let's hear our Ajay Kapoor, the CEO, and what he had to say about the company's earnings.
I'm happy to share with you the results and performance of Ambuja Cements for Q3 FY24. Ambuja has achieved stellar financial results, marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic market environment. The year-on-year consolidated performance for the quarter reflects a revenue increase by 2.8% of rupees 8,129 crores. The operating cost went down by 9.8% at rupees 4,526 per ton, a reduction of rupees 491 per ton. This is mainly on account of 21% decrease in energy costs driven by efficient fuel management. We achieved a 25% reduction in kiln fuel cost, now at 1 rupees 84 paisa per 1000 kcal, down from previous 2.45. With these improvements in revenue and cost, our EBITDA is rupees 1,732 crores, a jump of 70% YOY. The EBITDA per ton has increased by 65% to rupees 1,225, and margin expanded by 8.4 percentage points to rupees 21.3. We achieved 125% growth in profit after tax at rupees 1,090 crores, up from 488 crores, a jump of rupees 602 crores. Our consolidated cash and cash equivalent at the end of 31st December 23 remains at rupees 8,591 crores. This is post-acquisition of Sanghi Industries. Results on standalone basis reflect a net revenue rise of 7.5% at rupees 4,440 crores, in line with a 5.8% volume increment. The EBITDA grew by 33% at rupees 851 crores, with margins expanding by 3.7 percentage to 19.3 from 15.5. EBITDA per ton grew by 26% to rupees 1,046. A strong PAT growth of 39% at rupees 514 crores. Coming to strategic investments and expansions, Adani's total cement capacity reached 77.4 million, fueled by the commissioning of the new Amitha grinding unit, recent acquisition like Sanghi Industries and Asian Concretes and Cement Private Limited. We are capitalizing on our successful acquisition of Sanghi Industries, which is on a path of significant improvement in EBITDA performance post-acquisition. With the integration of 400 plus channel partners after the acquisition, our emphasis is on strengthening and reinforcing our iconic ACC and Ambuja brands.
Point taken. So that was actually the Ambuja Cement management talking about their earnings. But for the time being, we of course have the market, which is just holding on to that 21,680 mark thereabouts. You also have Nifty Bank, which is higher by 685 points. And Dr. Reddy's is the stock, which is up around 4.5%. But we also have the management of Piramal Finance joining us on the show. Aisha, let's discuss their earnings as well.
Oh, yeah, absolutely. In fact, let's hear out what the management had to say. Here's an excerpt of their chat with us.
The big story for us in this quarter was the application of some of the RBI circulars that have come out, particularly with respect to how we treat AIF investments. RBI, of course, as you know, came up with a circular on December 19th on how AIF investments by financial institutions should be dealt with. And they said that if you have any linkages of underlying exposures with AIFs, then you should make full provisions. At Piramal, we had 3,500 crores of AIF exposures, which we had disclosed a couple of days after RBI circular came out in the spirit of full disclosure. And of that 3,500 odd crores, about 1,700 crores, there was a linkage, i.e. the underlying exposures were clients were also our clients. But to be conservative, what we have gone ahead and done is taken the entire 3,500 crore exposure to AIFs and made a full provision on that and kind of taken that off our balance sheet. So that kind of one-time hit of 3,500 crores is what moves all the numbers. And so that flows into the profit and loss account on a post-tax basis as about 2,600 crores of hit. X of that, the company made a profit during the quarter of 290 crores. But once you actually bring in that 2,600 crores, there was a net reported loss of about 2,400 crores.
Fair point. So, but excluding these provisions, when I look at the operating metrics, your EM growth has been 6% sequentially, almost 9% YOY, and also wholesale 2.0 AUM has been 24% QOQ. Talk to us about the loan growth and the segments of loan growth. I mean, I remember a very interesting presentation from your team just 2 quarters back on how you're looking at the tier 2, tier 3 side. How's that shaping?
Yes, so loan growth is shaping up very, very well. We're feeling very good about the growth opportunities that we are seeing in the market. One of the things that we did this year is actually split our book into two parts, what we call the growth book and the legacy book. The legacy book, of course, we will continue to unwind and bring it down close to zero in the coming quarters. But the growth book, we are seeing some really solid growth. We are seeing about 63% growth year on year in this part of the book. It is now 48,000 crores in total size. We are seeing strong growth in mortgages, housing loans, loan against property, etc. We are seeing strong growth in used cars. We are seeing growth in the developer segment. We are also seeing growth in the unsecured lending segment. So all segments, we are seeing some very well-rounded growth opportunities. And as I mentioned, 60+% growth we have had year on year in that growth segment, going up to 48,000 crores. Now, let us see what the new financial year brings. But right now, just looking at the market, it looks like the growth environment continues to be very, very strong. Optimism in the consumer sector and the small business sector continues to be very high.
Jairam, I must congratulate you and your team, the way you are steering this, the tilt towards retail last few quarters. It's very visible. You had promised that it's happening. Talk to us, what is the stage right now as far as wholesale versus retail is concerned? And the next few quarters, how do you see the advancement towards more and more retail coming in?
Yeah, no, that's a great question. You might recall that about 3 years ago, Piramal was 95% wholesale and 5% retail. As of this quarter, we are 64% retail and 36% wholesale. So that shows you the massive shift that has happened within the portfolio at scale. So we are a 60,000 crore book. So at that scale, being able to drive that kind of mix shift shows you the level of execution that needs to happen for us to get there. Today, we have a 43,000 crore book in retail. About 30,000 crores of that is mortgages, which is housing and loan against property. This is our core business, affordable housing, and we are seeing very good traction there in the smaller towns and in the outskirts of big cities. It continues to grow nicely, though of course. With the post-COVID effect having waned off a little bit, we are seeing a little bit of slowdown there, and I'm hoping that in the coming months or quarters, maybe some of our old schemes like the Pradhan Mantri Awas Yojana, etc., some versions of them might come back, which can help these customers more as well. That's one area in which there's a little bit of softening as people have run through their savings, post-COVID. The rest the market, we continue to see good, strong growth. Cars are seeing very, very strong growth. And we are also seeing a movement towards larger ticket, both within housing and within cars. We are seeing a movement towards larger tickets. So overall, we are very happy with the growth prospects and the geography spread. We've opened another 25 branches during the course of this quarter. So we now
Welcome back. Well, for the markets, numbers of Jubilant FoodWorks are out and it looks like it's a miss versus expectation. We were working with a revenue profile of above 1400 odd crores. They've actually delivered 1378 crores in terms of revenue. The margins have also dipped on a year-on-year basis and a bit of a miss when it comes to the profitability. Our expectation was close to around 90 crore thereabouts. The company has actually reported a decline in a year-on-year performance and the number comes closer to 66 crore thereabouts. Of course, we are waiting out for more details. The SSSG growth or the LFL, like-for-like growth that they call it, is expected to be flat this time around. Let's see what they actually deliver because that will hold the key as well as the expansion plans going forward, as well as the update on account of the acquisition that they were looking to do. The international expansion that they have been talking about will be important to track. But let's take it across to Dipan Mehta, who's also joining us on the show to talk to us about some of these earnings. Dipan, from the pharma sector, there has been quite a few beats coming in. In fact, I think that's the only sector where we can say there is a secular uptrend. Max Healthcare today was also decent. Sun Pharma was good. Even Dr. Reddy's Cipla, they've all been decent numbers. Incrementally, how should investors view this sector?
Yeah, good afternoon and thank you for having me on your show. Yes, I think last 2-3 quarters, pharma has really turned out to be a big growth engine for the markets, and call it base effect, call it lower competition in the US generics market and better trends in the domestic market. All of these have led to pharma companies reporting good earnings, and then 2-3 I think key drugs like Revlimid and a few others have done very well. They had a lot of the pharma companies had exclusivity in terms of sales as well over there. So a confluence of factors are leading to better performance from the pharma companies, and with raw material prices also cooling off, we are seeing expansion of their operating profit margins. And I would say that in a market like this where investors should tilt towards safety, pharma and healthcare are good sectors to be largely overweight in.
Point taken. Let me take it across to Naresh as well and get a sense. Naresh, in terms of the market mood right now, what should be the positioning ahead of the big event which is there?
So in terms of the positioning, it's very clear the broader market has been outperforming. You have Nifty small cap 100 up 2%. You have the mid cap index also doing well. So the momentum continues in the broader market. And post the event, if we get any leadership from the banking space, we could see a leadership coming on the index also. So watching out for 21,800 odd levels to cross on the Nifty to confirm momentum. So for now, the focus remains to ride on to momentum across the broader market for now. But watching out to add more large caps once we see a confirmation post the budget.
Point taken. So that's the view coming in as far as the market setup is concerned. It's a broader market where the action is. Hold that thought, Naresh as well as Dipan. We have the management of Dabur joining us on the show to talk to us about their numbers. Mohit Malhotra, the CEO, is with us. Mohit, hi, good to be speaking with you. I understand that the volume growth has been between 4 to 6%, whether you include or exclude Badshah. But going forward, do you believe that the worst of the volume issues are behind?
Yeah, so if you look at the business, I think we've posted best in industry, best in peer kind of a result, and our result has been driven by more volume growth, and the price increase has been in the range of around 1 or 2% for us only, and rest has all got lapped over. So volume-driven growth is something that we want to sustain going forward in the year also. So in the fourth quarter also, while we lap over Badshah, if you look at standalone India results also, our volume growth has been around 4% on back of a 5% growth. So 5% in standalone business is backed by 4% growth, and that is going to sustain going forward in the next quarter also. And Badshah business has also done well, and most of the growth in Badshah business will also come on back of volume growth itself, and less of price increase and more of volume growth.
How's rural growth shaping up? Any signs of early recovery?
Yeah, so what's happening in rural, if you look at the FMCG number, we've seen a YOY growth in rural happening from year before last. But if you look at sequentially, there is a rural slowdown a little bit because of the inflation happening in food basket. Because spices, fruits, vegetables, inflation actually picked up, and CPI is around 5.7. So therefore, we see a little lag in rural. But I think year on year, rural is actually inching up. But for Dabur, it's completely contradictory. For us, rural has grown at 6% and urban has grown at around 3.7, 3.8%, cumulatively around 5% for us. And this is happening because of ahead of the curve rural initiatives that we put out there. We've increased our villages footprint from 100,000 villages to 117,000 villages now. Around 17,000 villages got added. We've added roughly around yodhas to an extent of around 8,000 yodhas in the quarter. So on back of these initiatives, our rural growth is actually belying the market growth of rural. And because rural is growing, that's why our volume growth is also showing up. We've curated a portfolio of rural customized product range, which is actually riding on the infrastructure that we've actually put in place. And that is the reason why rural growth is showing what it is. And we think these initiatives will continue for us. And Dabur is very salient in rural. Our salience in rural is higher than our peer salience in rural. And because you sell smaller packs in rural, the penetration moves up. And because the penetration moves up, eventually people buy premium products also. They upgrade from a 50 ml to 100 ml to a 200 ml. Eventually, that's how the penetration picks up. So it's happened for us in oral care. It happens for us in hair oils, in shampoos, in home care. I think category after category, we've seen a rural pickup happen for us.
So that was about the rural pickup in specific segments. But overall, if I had to ask you the segment performance, let's say in the F&B vertical versus the health and personal care, any specific trends that you can talk to us about which are emerging now?
Yeah, so HPC is doing pretty well for us actually, and we've gained market shares across all the HPT subsegments, and we've grown ahead of the category growth rate in HPC. If you look at hair oils, we've registered 140 bips gain in our hair oil business with both coconut oil and also in perfumed oil. In shampoo also, we've gained a low single bip gain in shampoo market share. If you look at home care market share, our Odomos brand is kind of grown 100,000 bips gain in Odomos brand, 180 bips gain in our Odonil brand. Skincare portfolio got a little impacted due to winters being contracted, but cold cream got impacted. The other part of skincare has grown by around 7% for us. So across the board in HPC, we've seen ahead of the category growth rates for us, and we want to maintain this momentum in HPC. As far as the foods portfolio is concerned, the season is not very salient, the winter season. So in winter, the beverages don't do very well. The percentage contribution to beverage business is little muted for us. But that said, base to base, our food business has kind of grown by around 7% growth in the beverage business has come. And food business, including Badshah, has also grown by around 22%, in which Badshah has grown by 33%. And our organic food business, which is homemade and culinary, has grown by around 5-6%.
Okay, Mohit, on that note, we'll let you go. Appreciate you joining us. But the other earnings that were just out was Jubilant FoodWorks. Incremental information coming in on the LFL. It's actually a decline of almost 3%. The street was going in with a flat expectation. So it's a bit of a miss there. And the dine-in is something which has disappointed the street. If I can come to you, Dipan, on this entire, QSR space, the early trends from the likes of restaurant brands, Asia, etc. were better. And we were hoping that there would be a bit of turnaround. But Jubilant's numbers look like unenthusing.
Yeah, that's right. It's been the case for now 2-3 quarters or so, and we thought the World Cup and the festive season would make a difference. But that's not happened. And in fact, I read an article about fatigue around eating pizzas, and it was really negative on Jubilant FoodWorks. And as a disclosure, we are invested in it, but the numbers are just not coming through. But I've seen Jubilant FoodWorks in this kind of a sort of a slow growth to stagnant for 2-3 years. And then suddenly the growth rates start to pick up and go into that 10-12% same store sales growth. So I think the long-term secular fundamentals are good. And there's certainly a good demand in terms of rising spends on QSR and changing habits when it comes to food, changing taste. And all of these things go in favor of Jubilant FoodWorks. Valuations also, I think, have come off from the peaks which they were in terms of earnings multiple. And I would say that this particular slow growth is transient. So I would like to remain invested from our point of view. Maybe not add fresh positions, but remain invested. So it's a bit of a hold over there.
in for Jubilant FoodWorks because the long-term story is intact, but in the near term there has been a bit of a disappointment. But Kunal, a couple of these auto companies, Tata Motors, Eicher Motors, they are perking up today. What's the trade that you recommend? And for Tata Motors, do you expect that 4-digit mark to come real soon?
Yeah, I think my sense is maybe by the second half of this year, we should be looking at a 4-digit mark for Tata Motors. It's been one of the most stable stocks, even in this last 4 days or I think 3-4 weeks of price recovery for Tata Motors. I call it recovery because the stock was consolidating at this 800 mark for I think the prior 2 or 3 weeks for itself. And the volumes in the last 2-3 weeks has been quite higher side for Tata Motors, which indicates that there's been a fresh wave of buying which has happened to the stock, and typically that's indicated that a new trend could be at play for the stock. My sense is that the stock should be able to surpass the 1,000 mark pretty soon, hopefully by the second half of this year. And even from the other auto pack, I think Hero MotoCorp, Eicher Motors is something which I believe could also be a good, interesting bet in terms of risk reward. The stock had gone through a correction, I think last month, December specifically, when it had come back towards 3,750 or 3,770 approximately. That was the low the stock had made. Spent some time over there, consolidated. The indicators were hugely oversold. There was a mild bounce back for the stock post those oversold nature of indicators. But then today's move is purely an indication that the oversold nature is now behind and the stock is now restarting a strong trend for itself. So purely as a risk reward play, would look out for Eicher Motors from current levels towards a target of at least 4,200, 300 over the very near term.
Okay, so that's the take coming in on Tata Motors as well as Eicher Motors. But Naresh, what's the sense on HCC? That stock has seen a massive spike. Used to be one of those traders' favorites earlier, but would you recommend any fresh buying here? And even BSC is showing a sudden uptick of 7%.
So HCC in the near term would face a lot of resistance because it has already moved up, given a breakout at 20, then at 35. The reason being that the highs of 2014 for the stock were around 48 levels. And for 2017 also it was around that levels. So at these levels, the upside could get capped around that area for some time. But structurally, the trend has been pretty strong out here. So would wait for a dip, any dip back to closer to 40 odd zones would be a buying opportunity. For now, 48.50 would be a tough one to cross. PSC is a tough one because the longer term trend has been pretty strong. It has moved up quite a bit. Short-term consolidation still in play. So would wait for a couple of days of more confirmation and then maybe look at BSC.
That's the take on BSC and HCC. But Dipan, of course, tomorrow is the interim budget. We keep on saying it's a vote on account, so don't expect much. But there are always these list of expectations, right? If I had to ask you one theme that you're watching out for, whether let's say construction or railways, defense or any other, what comes top of mind?
See, I think so far also the numbers which have come through from EPC players, capital goods companies have been pretty impressive. And the next 5-year term, if and when BJP comes to power, will be all the focus will be on infrastructure. That's their big ticket and big thinking on the part of the government. So I think that if you want to play the budget, you want to play a trading rally next for 2024 or beyond, and I'd go with the engineering construction companies. Like Larsen Tober, I thought very good set of numbers, although the stock has declined. But many such other companies, like ITD Cementation, another company comes to mind, Disclosure Vienna, Cancer Invest. And then there are the whole PSU stocks, defense, engineering companies like BHEL, BML. I think all of them should do exceedingly well because the capex cycle also has picked up. And the government themselves are spending a lot on capital expenditure. A lot of the business is going to the PSUs themselves. So from that point of view, I think the budget, if it has a higher than expected allocation for capital goods and for capital expenditure, then certainly it would provide an additional boost to these companies.
Point taken. On that note, Dipan, we let you go. Appreciate you joining us, and we hope to connect with you post-budget as well to see whether that really turns out to be true or not. But quickly taking stock of some of the other big buzzers as well in the trading session. And of course, let's take the BTSC ideas from our technical experts. Naresh, it's going to be an important day tomorrow. Not only the fact that there is budget tomorrow, overnight we'll get the Fed decision. This time around, we haven't spoken about that much. But if you look at the US futures right now, they are taking a bit of a slide. right? So that's an important factor to watch out for, at least at the start of the trading session. Though 98% of the participants believe there's not going to be any rate action this time around, but nonetheless, we're watching out for that US Fed decision on an overnight basis. But stock-specific calls, Naresh, what's the BTST idea?
So looking at names which are not really looked at. So first is a buy on InfoEdge, Naukri. The stock has retested those support levels of 4,900, 5,000. Everything in the new age companies has done well. This could be the one which could really surprise on the upside. So for now, a BTST target of 5150, stop loss at 4970. Second is a buy on Colgate, which post numbers consolidated and now given a fresh breakout into new 52-week highs. Stop loss at 2540, target price of 2700.
Okay, Kunal, what about you?
I'll go with two contra bets. First is about DCB Bank, a stock which has been beaten down as such from 155.60 to almost 130, 135 mark. So it looks attractive at current levels with a potential target of 10% upside, 150. Stop loss could be kept at 132. And Piramal Enterprise, a stock which has been reeling under the a sharp selling pressure, is now looking to come back above the 200 moving average. So it's attempting a breakout about 920, 925 mark. Would suggest a buy about 920 levels, targets of 980, and stop loss could be kept at 880.
Okay, gentlemen, on that note, Naresh and Kunal, we let you go. Hope to see you tomorrow in the studios as well for the budget. But before that, the market is closing in the green and firmly so. No disappointment as such. 21,730 thereabouts for the Nifty right now. The Nifty Bank also have at 620 points on account of the over 1% rally that we have seen. From the Nifty, the stocks that were leading from the front was Dr. Reddy's. Tata Motors had a good day. You also had Eicher Motors that was doing quite well for itself, and Sun Pharma was one of the result reactions that we're watching out for. And Tata Motors, of course, managed to become the most valued company in terms of the auto sector. From the losing side, L&T coming under pressure on account of its earnings. You also had Titan, which was down 1% ahead of its earnings as well, so we're watching out for that. BPCL, Tata Consumers, Kotak Mahindra Bank were some of the other big losers. From the banking space today, PNB actually managed to do very well for itself, 5% higher. Bank of Baroda, which was the result reaction, also saw a bit of a spike, 5% higher. And SBI, that PSU banking name, the largest one at that, was up a solid 2.5%. So the rally today again in the banking names was purely led by the PSU banks. Pharma, as I pointed out, had a great day. So apart from the frontline names, Gland Pharma, Biocon were a couple of other names that you should watch out for. UCO Bank from the PSU vertical, from Real Estate Pack, Brigade, Lodha, Prestige. These are the big names that managed to pull out good moves for themselves, while all the sectors ended in the green. Policy Bazaar, that was a result reaction with that solid jump of 11%. Godfrey Phillips was mighty excited in the trading session. And you also had result reactions coming in on Welspun, Voltas, Max Healthcare, KPIT Tech, as well as a lot of names from the broader markets, the likes of Jubilant, FoodWorks, etc. PVR too came out with its earnings, looked like a bit of a subdued set, at least on the profitability front, though the management commentary was quite strong. Saw a bit of a dip. Ditto can be said for Vaibhav Global as well. And of course, one can't forget Kalyan Jewelers and L&T. These were the two result reactions that we saw. Quite a bit of drubbing throughout the trading session. These stocks were also down. The broader markets actually did better than the frontline index today because you had the advance decline ratio, which was favoring the advances, and overall a close coming in above the mark of 21,700. But tomorrow is a very important day. Of course, it's a day of the budget. We'll get that as the most important cue. You also have on February 1st the auto sales data, which is expected. There's an OPEC meeting lined up, so that's also important from the commodity point of view. And of course, overnight the Fed decision will be out. But we'll join you early tomorrow morning with all of those updates as well as the special budget coverage only on ET Now.